Hey everyone, welcome back to another Stock Market Open. Today we've got a little bit of red, probably because the market's getting a little excited about what's going to happen with NVIDIA earnings. But it's not just that. It's also this morning you've got some chatter, at least, of the Federal Reserve, which the Federal Reserve has not indicated, but of people thinking about the Federal Reserve that what if the next move of the Fed is up and not down. And so that's leading to some anxiety as the day gets started, especially since NVIDIA earnings could potentially be something that push us, one direction or another. There's just this idea that the economy is running so hot that maybe in order to actually stabilize inflation, the Fed just has to keep going. Maybe we're really actually going to 6% interest rates. Again, the Fed hasn't indicated that's the case at all, nor are there really indicators of that in wages or inflation. Of course, January was pretty wild in terms of an inflation read, though a lot of people think that's something you can write off as, a seasonal adjustment or some form of one-off for the beginning of the year. Was concentrated in specific services that really raise prices at the beginning of the year. Who knows? But the point is, there's uncertainty. And every time there's uncertainty, the stock market likes to wobble a little bit. And we've got NVIDIA earnings coming up tomorrow, which is going to be quite interesting. Let's take a peek here. I want to see what volatility is looking like today for NVIDIA going forward. That'll obviously be one that I think a lot of people are going to be playing in the options market as well. You've got, 10.5% volatility going forward, expected at least for NVIDIA over the next 24 hours. You've got the usual, sort of the average volatility that you get on an earnings day is 4.31%. So sitting at a 10.5% expectation is pretty wild. 10.5% with NVIDIA beating 7 out of 8 times on EPS gap and revenue. Net income, they only beat about 5 out of 7 times. So that'll be a big report, and that'll come out tomorrow. Probably cover that live just because it'll be such a big moment where so many stocks might be sitting there waiting, wrangling their hands, going, what's happening with NVIDIA? Who knows? So we left off last week actually shorting or talking about shorting SMCI. It was actually really entertaining. I did end up shorting the sucker. I'm like, I just have to do it. And so that was quite entertaining. I sent an alert to everybody in the Stocks and Psych group. I shorted this sucker was up like somewhere around 6%. I did not hold on all the way to the bottom. I maybe closed out. I don't know, somewhere. This was negative. Maybe let's see if it started the day out at about 1,000. We're probably somewhere around like 980, somewhere around there. It didn't take long though. It was remarkable. It was like a 14-minute trade. It was pretty remarkable. It was almost a 4x. Which was wild, because I went for the 0 day, and that was just really great timing. Very lucky, so I'll take it. Anyway, the crazy wild stock is up again 2.7 today, after shaving off like 20% last week on Friday. But anyway, so what do we got here? Intel's up 3%, Supermicro, couple, Embraer's up 1%. Lunar with their rocket landing. I wonder if how that ended up going. Ooh, look at that. ARM's down 4.5 and Roku down 5. Let's see if we can find anything in particular going on with these two. We know SoftBank owns the majority of the outstanding float here on ARM, and it looks like interesting. SoftBank's Masayoshi Son seeks to build $100 billion AI chip venture. How interesting. The stock might be down on that as people think, oh, that's going to make it more likely that they're going to sell shares of ARM and move on to making their own. And see, that's what happens. Remember, this is the same thing with like lithium, right? Where basically what happens is you have so many individuals who get excited by the opportunity of making a lot of money in something like chips. So people with money go create chip designing and manufacturing companies. And it's the same thing that happened with lithium, where lithium prices go so sky high that everybody wants to get into lithium mining, that lithium prices actually end up collapsing, in part due to the massive increase in the number of suppliers, which is wild because, folks, I remember when lithium was skyrocketing, people were like, it's a commodity, you can't just go make more, blah, 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 whatever. There was basically no way lithium was ever going to come down. I'm like, yeah, right. It's a commodity, it's going to come down, and it always does. Because when it goes up this high, it's just a matter of time before people actually get around to say, oh, yeah, I want to get into producing that. And then what happens? Everybody gets into producing it. Boom. And that's what your lithium data set looks like. So that same thing will probably end up happening at some point in the United States for chips. Okay, so let's see. Today is the 20th. So we get Philadelphia Fed non-manufacturing activity, negative 8.8 versus the negative 3.7 expected. We get the minutes tomorrow. Fed's minutes will be out tomorrow. So we'll get to see what's up with the minutes. And that can actually be nice because maybe you'll get a little bit of insight into this idea of like, oh, is the Fed going to leave any kind of indication of interest rate increases in the minutes? Who knows? But there's a chance you might have some speculation in markets about that. See, that makes tomorrow a pretty interesting day because tomorrow you'll have minutes and NVIDIA earnings ahead of you. And so both of those would probably leave markets a little more relaxed today, so to speak, as opposed to as excited as things have been. Okay, so we'll see if that ends up playing fruit, being true. I suspect it will be. All right, so next we've got, let's see here. All right. Oh, yeah. So I was reading a little bit about this Fed rate hike thing, and it is very interesting because there hasn't been a single Fed person who suggested that up is the way. I don't think that up is the way. These are just sort of more miscellaneous suggestions that are coming about from the street, but it's very likely where we are for a more patient period of time, I think is the way to put it. Keep in mind also, we have, let's see here, let's quickly throw in here, we have EHAC up at the original form of EHAC again. Some folks were wondering about that, suggesting they like the original version. There's a week there where we were experimenting with something else. So there's going to be we need to catch up with a few days of the data that got stuck between the two websites. So we'll get that fixed. But yeah, let's see. Full reports. There we go. Okay, cool. So let's see. How do I do this? Enter. Boom. There we go. Okay, cool. Now you have a little banner along the bottom. Anyway, so yeah, I thought I'd remind you that that's still a priority. We really enjoy posting there. Okay, good. So now, let's see. The next thing that we want to pay attention to, so that was the Fed rate cuts piece we talked about versus hikes. The Bill Dudley had a piece, an opinion piece. He suggested that the Fed basically hasn't even gotten close to landing the plane yet. And the reason for that is, hey, there's this question, why is the economy so strong? Did we miss something? Is the neutral rate substantially higher than what we thought it was? Is the need to have higher rates for longer now ingrained into the economy? And so these are sort of questions Bill Dudley poses. He suggests that there are some things that are just unknowable until we get more reports, like, the jobs report that we had in January, or the CPI report that we had in January, all suggested, yes, the overall trend is still down, but there's some strength that will create some gyrations, he says, which make essentially limits or put limits on how quickly the Federal Reserve will cut. And so if we go to the Fed rate monitor, let's see how we're doing this morning. So Fed rate cut monitor, we go to December 2018. Oh, this is interesting. Okay. Okay, so December, the odds of getting 4 rate cuts are 61.9%. Wow, that's actually pretty low. So I almost feel as though the market has gone, back to the other side, to where it's, we went into the year expecting 150 basis points of cuts by the end of the year. And now we're sitting at about 100, so we've shaved off about 50 of that. And the market actually hasn't done horribly in response to that, which is remarkable too. Interest rates went on the 10-year yields, I guess I should say, went from 3.8 to 4.3. 3.8 to 4.3, and the Nasdaq's gone straight up on that, which is quite remarkable. And consider that for a moment. You go, yeah, okay, well, 4.27 this morning, but roughly 4.3. That's a half-point movement, and so now we've shaved off about a half point of cuts by December. Interesting alignment. Anyway, that also only gives us about a 37.8% chance of a cut in May. That's also very interesting. So 37.8% chance of cut in May. And again, pricing in, well, with what chance? That was only 61. Yeah, 61.9% that will end up having 4 rate cuts. And how interesting, we've aligned with the Fed. 87.7% chance of 3 cuts by December. That's wild. So that's what the Fed told us all along, which is pretty wild. It's sort of like, don't fight the Fed, listen to the Fed. They told you 3 rate cuts by the end of the year. And that's essentially what markets have priced in now. With, again, only 61.9% by May. 61.9% of 4 cuts by December, rather. Yeah, there we go. 37.8% chance of a cut by May. Okay, that is interesting. So, what else? Yeah, there was this little thing I threw up on eHack. Saying throw up in the morning is not the most pleasant. I guess unless you're talking about a tiny little baby, then maybe it's acceptable. But okay, so let's take a look at this. So we go to eHack.com. Yesterday, I tossed this up right here. I thought this was very interesting. The Financial Times talked about a sharp increase in office shopping and other real estate loan late payments. And they suggested that reserves that banks have, like the big ones, JP Morgan, Bank of America, Wells, Citi, Goldman, Morgan Stanley, are down now to 90 cents per late dollar. That a year ago was as high as $1.60. So you've had this sharp deterioration in basically money available by banks for covering these delinquent loans in the event that they needed to. And so now the value of delinquent debt has doubled. Look at that. You've gone from $24.3 billion in delinquent debt, or to $24.3 from $11.2. And this quote here, banks may have looked fine 6 months ago that are not going to look so good next quarter. So I thought that was neat to see. I mean, in reality, $24 billion is still not that huge. The question is, how much has that been collateralized, right? So, you know, has this been, as I like to say, swapped up like 2008, where 24.3 billion turns into 240.3 billion? That sort of multiplier is what causes the pain. All right, hop in here for a moment. No, okay, hold on a sec. I messed something up. That's okay, I'll fix that in a sec. All right, it's clearly the version of Monday for the devices. We'll fix that. But anyway, but then again, you wonder, you know, even if it's 10x, that's certainly more reminiscent of 2008, but 240 bills still doesn't compare to like $100 trillion, right? We had a $10 trillion mortgage market that was bubbled up to like $100 trillion, which is, I mean, those are some real numbers. I mean, the Bank Term Funding Program had, what, about 165 billion in it? Bank Term Funding Program, here we go. Let's see what the status is today of this sucker. Bank Term Funding Program, yeah, it's pretty much flat, 164 bill. Okay, so, yeah, let's write that down quickly. So, in 2008, we had about 10 trill. There we go.
Right now, that's particularly.
There we go. Okay. Leveraged up to 100 trillion. Yeah, that's why we had such a crazy mortgage market. So that puts a little bit of scale, I think, on the stress, but it shouldn't minimize it. Okay, what about, let's see here. We did, I'd like to see the Fed reverse repo. Let's see where we sit. I think we're under 500 billies now on the reverse repo. No, it looks like we just ticked up above 500 again. Yeah, 532. So I'll pull that up here. This is what a lot of folks look at as essentially the leftover money that the Fed is trying to drag out of the economy. And the way they might do that is essentially dragging out money by vacuuming up $80 billion a month from financial markets, 80 to 90 billion, and they keep going essentially until the repo facility is drained, which is a place where banks like to store their excess cash. One example of that. And of course, this reverse repo facility exploded to somewhere around $2.2 trillion. So a lot of folks suggest that one of the reasons the stock market goes up, or has been going up, is because of this draining that sort of acted as a ballast, or maybe a capacitor, a flux capacitor, to the Fed's tightening. It's an idea. So it's always neat to think of or speculate. Okay, so okay. Let's see here. Then we have gold. No, what's this? Gold is trading at perhaps the largest premium to modeled values on record. Rather than suggesting a sharp decline is in store for the metal, it's perhaps worth considering whether the demand function has changed. It's an interesting comment. Okay. Let's see here. What do we have here? Oh, yeah. Okay, here. We get into some NVIDIA chat. First, Walmart's outlook for a more cautious consumer signals more subdued earnings for retailers focused on discretionary items. The company's outlook was relatively subdued. Forecast slower sales as shoppers stay selective, spending less per trip but spending more frequently. Okay, we'll look at their earnings in just a moment. NVIDIA is arguably as macro as the Fed. There we go. Yeah, good news. Okay, blah, blah, blah. NVIDIA is the vanguard of the AI theme, given its role in chips behind AI. And for better or worse, we seem to be in the phrase where there's almost no limit to the capabilities that the public is willing to attribute to this technology. Yeah. It's gonna be wild. All right, let's see what we got with Walmart. Again, those earnings are tomorrow after we get the Fed minutes as well. Did also just have a little bit of an uptick there on Bitcoin and Ethereum. Ethereum's up 13% in the last week. You're sitting at 29.91, with Bitcoin just within the past few minutes here popping off a little bit from 52.2 all the way up to 52.8. So a little bit of a boost there on BTC out of, well, I mean, it does this, but usually I like to say out of nowhere. It's certain traders have awoken.
Numbers are very, very low historically. As we just had a discussion from the previous person you had on, consumers have surprised, even though they're moving down the price ladder. So I think there's no need. I think the bottom line here is there's no need for them to do anything in March 18 and 19 when they meet. And the question is, do they do anything at the last day of April, first day of May? We'll see. But what we are going to get, Andrew, is a sense of the dot plot, as it's called, the SEP, after the March meeting. And I think that's what I would be paying attention to, and how they express themselves after this next meeting.
And how do you expect them to express themselves at the end of this meeting?
I think they will continue to reiterate the word sustainable. And if they can do that, that'll just send a signal to the market. We've gone through the silly period with market expectations, 6 cuts this year. So much of that is just wishful thinking, in my view. The fact is, the Fed continues on its path.
Right.
What's driving the yield curve is also the massive federal borrowing that's taking place. The auctions in the 10-year have gone fairly well. As you know, they've front-loaded more of what they're trying to refinance. A third of the U.S. government debt's going to be refinanced this year. It's a big number, 10.1 trillion, I believe. So there are these different cross currents here. And I think the Fed is not the only thing you should be watching here. You should be watching
Richard,
financing.
Well, let me ask you about the financing. I don't know if you remember when Stan Druckenmiller made the argument that effectively the Treasury Department needed, I think previously, I think it's hard to do now, to have taken advantage of lower rates. Are you a believer that the government should have been more aggressively thinking about how to effectively hedge the portfolio?
It wasn't just Stan. Janet Yellen herself said, go big, when rates were nil. Remember, the cost to carry now for the U.S. government has doubled, and will continue to along that path, with the balance of risk being for higher rates, not lower rates, particularly as you move out the yield curve. So yes, he was right. And Janet Yellen, let's give her some credit. She was right. Go big. But guess what? The dealers will not accept 50-year paper, which everybody was suggesting, certainly not century bonds. But we should have issued more when rates were hovering around.
The question is, could we have? I mean, there are people inside the Treasury Department that say this is a ridiculous argument, because while the market would not have, the market wants a consistent offering, effectively, and the second you show your hand and say, I'm selling, this number of bonds at this price. I mean, by the way, we've already done that a little bit. That might ultimately impact the price itself.
Well, that's an argument I disagree with her. We had an opportunity to do two things: issue a large amount when money was near free. The interest rate was about 2%. And we had the opportunity to go very, very long, which several other governments around the world have done. Several universities in the United States have done. Several cities have done. Even Washington, D.C. has done. So we missed that opportunity, but that was then. This is now.
Right.
We'll see how the auction schedule proceeds. But remember, Andrew, these are big numbers. And the question is, can the dealers and the market digest all this as the Fed is reducing its balance sheet?
Richard, do you have a view on the other big headline of this morning, which is this Capital One Discover deal? I think a lot of people had been expecting it or thinking that this is sort of a natural combination, but thought maybe the regulators would not approve a deal of this magnitude.
I don't have a view on it. I mean, banks obviously like to be on the credit card side, and so I don't have a view.
Well, that has to do with Capital One acquiring Discover.
You looked at it and said that this is actually a good, I mean, there's an argument to be made this is good for competition insofar that if you're Visa, MasterCard, Discover has not been a real player in the past couple of years at a minimum. And potentially, if you start to funnel all of those Capital One customers, at least some of them, onto the rails that are Discover, maybe it changes the dynamic. I don't know.
Well, I think it's good for more competition. It does change the dynamic. We'll just see how effective they are with that property.
Richard Fisher, it is always good to see you and get your perspective and insights on everything. Thank you, sir.
That was not very insightful. It was kind of boring. It's kind of like, yeah, I used to work at the Fed. Have me on. All right, sir. So what's the Fed going to do? Well, the Fed's going to have a meeting on April 30th into May 1st. And we'll see. Oh, what do you think? Well, I think the market got ahead of itself, pricing in 6 cuts, and we'll see what the Fed decides when we get the SEP. Okay, dude, thanks. Like, how to scream, you're out of it once you're out of the Fed. That's almost got to be painful, though. It's like once you get kicked out of the Fed, now you're out of the Fed, and now you got nothing. I don't know. That seems depressing. Unless you got another job you could go to. All right, so Walmart buying Vizio. They were talking about that last week with getting into the TV acquisition. Interesting. The Walmart 2025 adjusted EPS not coming in that strong. Coming in at like 688 maybe, 890, 690, something like that versus the 709 expected. And then we've got, let's see, Walmart sees net sales for 2025 up 3 to 4%. Sam's Club grew 3.1%. Walmart only U.S. stores comp sales up 4% excluding gas. Raises annual dividend to 83 cents a share. Let's see here. Yeah, I mean that I would say that's almost roughly in line with expectations for numbers there. Nothing really scary there. Let's see here. Yeah, look at the stock though. Stock's actually doing very well, up 4.84%. It did have a little bit of a heart attack there in December, but boy, it's right back to this longer-term trend that it's had. You can go out to the week chart here and look at that. I mean, that's a beautifully positioned trend that you've got here. Oh yeah, look at that. It's an uptrend. People like uptrends. All right, so unless you're short. But I don't know if anybody's really short Walmart. All right, let's try Home Depot. Let's see how they did. Home Depot. Okay, Home Depot. Comp sales come in at negative 3.5% versus the 3.6 expected. The problem with Home Depot is a lot of their stuff is going to be based on commodities. Like when lumber prices fall, their top line will go down. And so that gave them what appeared to be this faux pricing power in sort of 2021 and 2. Anyway, Q4 EPS 282, comp sales -4. We saw that. Net sales missed slightly, boosted their dividend a little bit. They call 2023 the year of moderation. Okay. Year of moderation. Well, that's sort of behind us now. But here's Home Depot, down 2.5%. It kind of makes sense. Less people spending money on home improvement. People do that when they're somewhat uncertain about what direction home prices are going to go.
Rush into that stock, and it's been quite the opposite. The I don't know about the goggles, Andrew. I mean, Microsoft has that. If you had to pick someone that AI is going to help, you'd probably say Microsoft more.
Well, certainly in that space, you'd have to say Microsoft, and then you got the chip makers going absolutely crazy. You got the SCMI.
What's wrong with Apple?
Or SMCI, I should say.
Fundamentally.
Nothing's wrong with it.
What do you attribute it to, though? This relative underperformance?
For Apple?
Yeah.
I attribute it to the fact that you said goggles. You think about their products. I don't know that they've necessarily come out with anything brand new. Just seems to be improvements of other things, except perhaps the goggles. And so I think there's not that excitement around Apple. If you think of Apple 3-5 years ago, it was always, oh my God, I have to own an Apple product. I don't necessarily see that. I don't necessarily see that in our customers.
So is this a problem for tech?
I don't think so, because you have other companies that are stepping in.
Take the baton. AI.
AI, and you look at the craziest stock, SMCI. So you look at what that stock's doing right now, and if people are going to go trade it watching at home, great. I love volatility, being an options trader more than anybody in the world. However, that stock right now has an implied move for this week of $134 between now and Friday. That's
not what we're looking at, but you said TSMC, right?
No, SMCI.
Yeah. Oh, I'm sorry. Yeah.
So it's got an implied move this week of $134. A lot of people are trading it, and again, volatility's great in many cases, but you have an $800 stock with a move that big. So basically, you're talking about rough back of the napkin math, 15%ish of the stock price. I don't know that most people are ready to take that sort of risk, and it's something that, again, you have to be a little bit careful of if you're going to go into that one.
When we had the markets break their streak last week, it's not starting out very good this week. Did the inflation data cast a pall on retail investors?
I don't think it did necessarily, because you saw what the market did after the sell-off. We came right back. I think people expected that at some point we'd have a little bit of a breath, if you will. When you're up 15 out of 16 weeks we've been up now, that's absolutely unbelievable. So I think people were waiting for one shoe to sort of drop a little bit. I think what's going to be more interesting is, as you brought up earlier in the conversation, Joe, do we start to see more of these tech stocks have a little bit of issue? If we have that, that's going to be, I think, the thing that breaks people's confidence, so to speak. But since we're through,
well, it just breaks the idea of the long-term trend, maybe. But anyway, I think this is neat. You've got look at Trade Desk, for example, here, up 17% versus down a couple percent here in the pre-market. Something that I thought was neat about Trade Desk, I actually talked about on eHack over the weekend. So if you go to eHack, you go to, let's see here, this one, Bloomberg on prices. And what they touched on was basically how Coca-Cola, in their earnings call, kind of refused to brag about price increases as they have in the past in America. Instead, they just talked about how they're raising prices in like inflationary markets such as Argentina. And they also showed how Unilever, which does a lot of ice cream, coffee kind of product, whatever, how they were able to raise prices 13.3% Q4 22. And that only went up 2.8% in the fourth quarter of 2023. So this idea that these companies, Kimberly-Clark, Unilever, Coke, some of these, Kroger, some of these more everyday consumer stocks, or companies rather, are going to shift to marketing to try to get their volumes back up, and how this could be a benefactor for companies like Meta, Google, Amazon, which wasn't mentioned though, but I think is also a beneficiary, would be Trade Desk, another advertiser for connected TV. It's clear that connected TV is becoming so potent that you have companies like Walmart, buying TV manufacturers, and Roku getting into its own TV manufacturing, and so you've got Trade Desk working with Disney, for example, on distribution of ads, and then, of course, many other platforms, whether it's ESPN or whatever else. But it is interesting that they also mentioned these companies might be a lot less likely to lay off than companies like tech did. And we really got our tech layoffs, or companies in tech did, last year, which is last year when we had our layoffs, compared to, you look at companies now, some of these consumer packaged good companies, and you ask, oh, can they really lay off? Well, if they lay off, their volumes are going to go down in some of these. So maybe less layoffs ahead than initially feared, especially if the tech layoffs are behind. So I thought that was pretty neat. That was a good piece here. Oh yeah, and this was a funny chart too. Look at this. Look at these two stocks here. They're almost somewhat merged. You'd think they're in the same industry, right? This is all on ehack.com. They've moved almost in sync here, which is kind of wild. And they've even more recently exploded up even higher. Look at that. It's almost this perfect sync. And you might think, oh, you know, what two chip stocks could it possibly be? It's actually not two chip stocks. They're two stocks in totally different industries. One of them sells chips. One of them sells sweaters. Yeah. This chart is NVIDIA and Abercrombie. What? It's just wild. The how could you say it? The odd timing that sometimes you can get with random alignment here. I don't think there's any thing actually linking these two companies together, but it's fascinating. Let's go back in over here. Let's see what Jimbo has to say this morning.
It's a good-looking chart, and they've managed to work through the issues that were an overhang for a while, like inventory. I want you to listen. I know you have said McMillan on tonight.
No, let's play away.
But let's listen to Doug McMillan on the call, because he addressed that very issue and where the company is now.
We're just in a healthier place than we were a year ago, and I think inventory is a big part of that. As we noted, inventory in the U.S. was down 4.5%, down 8% for Sam's, and that just enables us to operate a lot more effectively. We saw markdowns in the quarter be notably less than they were the year before, and all those have an effect on gross margin.
That's a big deal, because it was such an overhang that we talked about, you know, let's say a year ago, whether it was Target or Walmart, this inventory overhang, and it's just taken a while to work through.
They all figured it out. No, I don't know about the read through Target. I don't want to get too aggressive, because I thought that Home Depot, if the stock hadn't been up so much, and January not that good, the cadence not that good. But I look at Walmart, and I say to myself, a global advertising business is expected to reach $3.4 billion. That's found money. How many companies?
There you go, talking about ads, just like we just were.
So I think that these guys are serious, and there's a big three developing. There's Costco, there's Walmart, and there's Amazon, and that's how we buy things. By the way, Walmart is very good e-com. They have good AI to try to figure out what people are doing. They had a great CES conference Doug had. Mm-hmm. So I just think, what's not to like? And I know the
Yeah, that's a good question here. Somebody says, how do Walmart earnings correlate to Costco? Well, probably good, honestly. You know, I mean, Walmart and Sam's Club specifically is, I mean, I would say a perfect, almost competitor to Costco. Almost. I not to get onto the little micro level where people are like, ew, you know, one's way better than the other, whatever. But they're almost direct competitors. And the guidance wasn't, you know, super strong, but it also wasn't bad. It was just sort of more normalizing. And I think we have to remember, when we normalize, we're actually normalizing up compared to 2019, right? So, you know, you get a lot of inflation. Every price and everything resets up. Well, revenues reset up then as well. And then if you're sort of just normalizing or leveling out, maybe that's not that big of a deal. Let's see here. Walmart, deflation is still a possibility. The company expects it to be less likely based on what it observed during the last quarter. Ooh, how interesting. While grabbing more spending with lower priced groceries and other basics, cautious about the health of the consumer, U.S. consumers have been buying cheaper products and seeking value as they pull back from discretionaries, hitting companies like Target and Home Depot. Recent moderation in inflation is another challenge for Walmart that have typically been used to passing down price increases to consumers. The increase is slowing. Blah, blah, blah. Okay. Walmart's also beefing up automation in warehouses and stores. Well, yeah, that's going to be the trend. Greater supply chain automation. CapEx has jumped since the pandemic. Oh, good for Walmart. I think there's so much room for improvement if you're a company like Walmart to introduce, robotics to not only stocking shelves at the back of the store, but frankly, the front of the store too. I mean, the amount of work that goes into just scanning inventory. Good Lord, what a pain in the butt. This is where I really like what Amazon does with their basically fully autonomous stores. Those are pretty remarkable if you haven't gone into one of those yet. Pretty cool.
As we get close to the split.
All right, so you got Walmart's going to open at a new high. Depot's going in the opposite direction. It kind of sets the stage.
I don't want to dump on Depot.
We don't have to dump on it. The stock is doing what the stock is doing.
Well, the stock's dumping on itself.
Yeah, there
it doesn't
you go.
need me to dump on it.
There you go.
I have to jump on that bandwagon.
Okay, important earnings reports, but the major earnings report of the week is NVIDIA. That's Wednesday after the bell.
Oh, it's way.
Yeah, we already know. So this is interesting. The Canadian inflation, without a seasonal adjustment on the month-over-month, comes in. It was expected to come in at 0.4, came in at 0. How interesting. And then the CPI core median came in lower than expected, 3.3 versus 3.6 expected. Canadian core trim year over year, so slightly different measures, 3.4 versus 3.6. So less inflation than expected, with headline CPI coming in at 2.9 versus 3.3. That's quite interesting. You've got much less than I think folks were expecting there. Now, I wonder if I can... It would be really cool is putting the U.S. CPI year over year. The problem with this, though, is you are going to get an energy factor in there. And but it does give you a little bit of something to consider. Oh, wow. That's weird. Okay, I'm going to take a picture of this. What I did is I put US CPI over Canadian CPI. What do you think? Now, they don't have the best availability to compare month over month. I'd like to, but I'll keep playing with that for a moment. But first, let me throw this up on screen right here. Okay, so what do you have here? The blue line is US CPI. Can you see that blue line there? And then the white line is Canadian CPI year over year. That's pretty remarkable. I mean, they're almost perfect. That's pretty scary. So, yeah, their month over month, they could really only pull as, oh gosh, that's all over the place. Their month over month looks like a heart rate monitor. So that's not too particularly useful. And then they don't actually, we do have a chart. I could grab a chart of their year over year core. Okay, that could be interesting. So let's go CPI core. Can I do that? Why is it so hard? Not super core. I just want core. CPI. Or as some like to say, the CP lie. No. There we go. Less food and energy. Got it. Okay. Ah. Interesting. A little less correlated, but the trend is the same. So this was a year-over-year headline. And then if I do CPI core year-over-year, this is what that looks like. So you can see us settling, we're this blue line again, settling by about 4. And Canada is below us here at 3.3. But again, the trend is roughly the same. I always think it's funny, as soon as we have like one little bump, one bump like this or one bump like this, immediately everything switches to, oh my gosh, inflation's coming back. It's the end of the world. So I do think, though, that does set up a little bit of frustration over the next month, at least until you hopefully get a softer report going forward. You don't get a softer report, for February, you're probably going to have some problems. Oh, Steve, it's the second wave. Well, Steve, aren't you from Canada? Yeah, your numbers are the ones coming in lower. YF Capital One is buying Discover for 140 as stock as the stock's still at 124. Well, that's simple. That's called the risk of government preventing the deal from going through. Canada has no industry. Oh, Wumble, you're gonna have to fight Steve here. So, was Canadian CPI hot in the last 2 reads? Oh, I don't know. I guess we can look. So, I mean, I guess it depends relative to expectations, unfortunately. So that's not exactly very convenient to figure out. So maybe, I don't know if I can figure that out really easily. Maybe if I click on news stories for Canadian CPI and I go back a month, see, that would be the way to do it. That's a pain in the butt, but I guess we could do it. So I go back. Oh, poops! Drop Charizard. Well, a little fake prints here. Okay, so Canadian inflation unchanged year over year at 3.1% in November. Estimate was 2.9. Okay, so that was November. And then, let's see here. Canadian inflation, 3.4% in December, matching estimates. CPI falls 0.3 on the month, matching forecast. That was last month. No, I wouldn't necessarily say hotter, but yeah. Anyway, all right, whatever. That's just Canada. Oh, Canada. Okay. Let's see here. What else? WorldCoin. What do we have here? It's been a testing year for creditors of bankrupt investment firms Three Arrows Capital and Alameda Research. But a recent surge in the price of crypto token WorldCoin is giving them some solace. WorldCoin, the coin of the crypto project co-founded by OpenAI Sam Altman, has jumped 140% over the last 7 days. That guy can put his name on anything and it probably skyrocket right now. WorldCoin. Oh, man, it just sounds like a scam. WorldCoin. Oh no. We're going back. WorldCoin. Oh, which one do we want to look at? There are a bunch labeled WorldCoin. It's a little annoying. WorldCoin. Is it this? What is it? Yeah, $6-7. Yeah, it must be this. It must be WLD. Not sure about that, but anyway. This sucker has been out since July. The coin's jump has boosted the portfolios of the two largest holders, Three Arrows Capital, Alameda. So how is Sam Altman involved in this? I don't know. It says co-founded. WorldCoin is a crazy project, but these kinds of things really help creditors in the bull market. The rally in the token is a huge home run for the creditors of the bankrupt firms, especially 3AC. Got hated on a lot for this WorldCoin investment in 2021. How does it say 2021? The chart only goes back to 2023. Unless maybe it was like a private at that point. WorldCoin, which launched in July. Yes. Okay, so it must have been an early investor. Use a small device called an orb to scan people's eyeballs in order to generate a unique digital identity. That identity, or World ID, grants the holder proof of personhood. It never ends. It's always proof of something. What was the crypto that allowed you to like basically do proof of work by putting like a satellite dish outside your home and you'd like join in supporting decentralized internet, like beaming radio waves through your house. I don't know, probably not cancer causing, I don't know. But it's so proof of personhood now. Okay. Users receive WorldCoin tokens in return for participating. Other than sharing a founder, WorldCoin and OpenAI are not formally connected. Oh, it never ends. So OpenAI, crypto, I want in. That's all it takes.
You can just click on a single button which says, give me a summary.
Helium, that was it. Yeah. What was that? That's the radio one. I had some. Yeah. You know, there was a while there. Somebody who allegedly said they were from Helium said they were sending me one to do a review on it. I never ended up getting it. Yeah. So I don't really remember. But anyway, apparently everybody else was. So I never really looked into the project. I just heard somebody like, oh, what? Okay. So, wild. Okay, what else? Okay, let's see there. Okay, so we talked about Capital One, Discover, talked about, but yeah, that's why you've got a mismatch between there. It's a good question, but yeah, you're gonna see people price in uncertainty about like the FTC approving that sort of merger. Home Depot sales dropped for a 5th quarter on weak demand. Huh. All right.
Foundation model to create images. And I think the value really there was anybody who has the story to tell. They can, through text, take a blank screen and start their entire creative or ideation process. So that was on the creative side. On the small and medium business side, as it relates to marketers, what they want to do is they want to run campaigns. They want to personalize their information. So those were the two announcements that we had made before. Today's announcement augments all of that and brings it to PDF as well.
How are you thinking about, you mentioned Firefly, the issue of copyright infringement, which has come to the forefront. And when you announced Firefly, you said you would basically indemnify businesses that were sued for copyright infringement. So you must be thinking big about what is a still growing and very important issue.
It's such an important issue for us, Scott. And at the end of the day, if Adobe doesn't...
All right. I stopped by Dave & Buster's on Saturday. OMG, it was packed. Line was all the way outside just to get in. That's crazy. And Dave & Buster's isn't particularly cheap either. Something that has a lot of folks curious because the consumer has been so strong is what happens when and if credit dries up. That's the fear that a lot of people have is once credit dries up, are we in a place of the consumer actually weakening? That'll be quite interesting. Biden administration intends to award Intel over $10 billion in subsidies. Potential funding represents the largest award to date under the Biden administration's $53 billion CHIPS Act. Well, see, that's not a surprise. Intel getting handouts of the stimulus checks. It's like the only reason I invested in Intel. I'm like, these folks are going to get lots of stimmy checks. It's only up 2.6% now. But, yeah, I feel like that should already sort of be built into the value. 170 firms have applied for CHIPS funding. Only 2 grants have been dispersed. Wow. I didn't know that many firms were going for it, but it kind of makes sense. Also makes sense that Intel's probably going to go get it. Supermicro short sellers notched $1.2 billion as shares tumble. I was one of those. I got my 4X in 14 minutes. Well, it was almost a 4X. It was like 3.7 or whatever. 0-day options gamble was hilarious. Anyway. You could have held more, bro. And if you just held on longer, bro, you would have had more. The gambler's fallacy.
Last question. Somehow we think that AI is winner take all, loser take none. When I listen to you, these are two different businesses. Whatever. whatever Altman's doing has nothing to do with the small and medium-sized business or large consumer packaged good company or Walmart. What they'll be doing with yours, they're just in the day-to-day researcher at a bank or anybody who's a lawyer. These are all people that aren't going to use Sam's product. Your product works.
Without a doubt, when we think about Gen Studio, which is our product for enterprises, every single marketing department or agency is now going to say, how do I create all of the variants, all of this production that deals with it? And from the perspective of, I think, where Adobe continues to win, every time we've had one of these tectonic...
Boring. Walmart's up 420. See, that's not boring. That's entertaining. Lunar stock is like skyrocketing here in the AM. This is the... What are they doing? They're doing the lunar landing or whatever. They've been skyrocketing almost every single day, and I don't know that a lot of people are paying attention to them just yet. But, yeah, it seems like we're pretty regularly on 30% days here. It's only a $732 million market cap. Problem with that is it's very manipulatable. Whatever. So a little bit's potentially scary, but their launch is, when is their launch? Oh, let's see here. Let's get some details. Did like how? Okay, Wednesday. So it was supposed to happen already. So it must have happened. Okay. Intuitive Machines Lunar launch. Launch date. Okay, here we go. Feb 15, on the way to the moon, planned touchdown in 2 days. Well, that's not bad. 1 week. A week to get to the moon. Intuitive Machines hopes to make the first private sector moon landing. Yeah, I mean, you're going to have a lot of speculation going into, you know, if they make it, what happens to the stock. That's fascinating. Very interesting. All right, so 2 days for that catalyst, I guess. What's going down? Roku. Oh, that's probably because of the Vizio deal. We talked about one of the sons of in SoftBank wanting to start a $100 billion venture for chip firm, which is putting some pressure on ARM, Affirm, MasterCard, Home Depot. These guys all down a little bit on consumer. You get your interest rate sensitives here, your Enphase and your Tesla. Although they've been up a little bit here recently. Yeah, look at that. There's Enphase. This is on the day chart, averaged day chart. So the average has been up on Enphase, with Tesla trying to get up there from about, you know, its little floor. Although not much enthusiasm. It's been like a dead dog. People are just poking it with a stick like, bro, the rally's going on. Are you going to get up and participate or no? And so far the answer has been, which has been somewhat depressing for those invested in Tesla. Ubiquity 126. What do we got over here? Google 141. Baba down again. Let's see. I know Michael Burry's on this one. So zoom out on the week chart here. Boy, I don't even know why this line is here. May as well just get rid of that line. It's I don't know. It's doing too much. It's also not even that great. I'll just get rid of it. There. Okay. All right. What else? Let's see what the suits are saying. We've got 5 minutes to the opening bell. Okay. Credit cycle's recovery is now hard to deny. Things look bleak for U.S. credit markets last year. Banks were tightening. Deposits were falling. Bankruptcies were rising. Credit spreads remained elevated. But a collapse has not happened. Instead, banks are now easing on lending standards. No. That actually continues to support the expansion of credit? No way. We got to look this up. So we got to go, let's go with St. Louis, Fred. We could go credit standards. That's usually what we want to do. And net percentage of domestic banks tightening credit. Ah, interesting. I'll pull that up right here too. Let's see here. Net percentage of domestic banks tightening standards. There we go. So take a peek at this. Wow. Wow, look at that plummet there in, oh my gosh, you're down to 14% are tightening. No way. This is for commercial and industrial loans. Okay, so that's a loosening in commercial and industrial, so that's interesting. And then there's a second form, which is just your credit card loans segment, which is right here, which is also showing a loosening. You're still at 22% of banks tightening credit standards. But boy, you would have thought this tightening would have continued, but it U-turned right around Q3. Q3 2023 was about the flip there. That is really funny. I mean, what that does, which is interesting to know, is you basically create more money the looser this gets. And so when you have looser credit standards, it's easier for people to qualify for loans. And so people can borrow more. I think it creates a pretty vast debt bubble that at some point will have to be reckoned with. But, you know, much like sugar, it could certainly energize markets and earnings and consumer spend for quite a while. You know, maybe even, dare I say, near a decade. I mean, if we zoom out for a moment, let's look at this. The last time we had a loosening of credit card standards, last loosening was 2021. That makes sense. And then before that, 2010, you actually went negative. See, that potential is still ahead of us, absent a recession. That's interesting, which it did occur in the mid-90s. Mid-90s, you had this tightening, and then you had this reducing. But that actually allows for more expansion of credit. Well, that's really interesting. All right, let's get to the bell.
Terrific job. By the way, Ingersoll Rand, no slouch, the other downgrade. This is what I expected to start seeing, and I'm sure you're going to be talking about on your show, is more of a valuation. Let's say don't want to lose the profit, ring the register call.
Yeah.
Because there ain't nothing wrong with Caterpillar.
Look at the chart. I mean, the chart speaks to exactly what you're saying.
Yes, and I want to reflect on that by going to what David Kostin is saying in his weekly Kickstart. And he's talking about upgraded outlook for U.S. economic growth. And when you think about that sweet spot cat. Now, that cat quarter had so much to like about it. But I felt infrastructure data center. Wow. I mean, you can't stop in data centers, which is a read-through to NVIDIA. So what we have here, if you think holistically, you can't pull out cat the way it used to be about mining and about China. China, by the way, not even a factor, although China, we can talk about it, had some good numbers over the weekend. But I say when you...
All right, mostly red, unfortunately. But again, not a surprise with the Fed's minutes coming up tomorrow, and then not just the minutes, but then we've also got the, well, that's at 11 tomorrow. And then on top of that, you've got, well, NVIDIA earnings. So expect some of this to be red. Let's take a peek at how sticks are actually moving into the open here. Let's jump into the Qs. We're down 38 bips. Actually trying to get a green candlestick here. You've got, after the Intel $10 billion grant, only about a 2% movement here. Also trying to go green. Home Depot's trying to push up green after their earnings. What is going green, though, is Walmart. Walmart pushing up 5.5% there. Super Micros, bobbing around 1%. Trade Desk bobbing around -3. You've got Bitcoin. It looks like that little short pop there fell right back down. Yeah, it did. There was a moment there where you really popped up about an hour ago, and we've seen that kind of come down a bit. ARM still at its 4 or 5% down. You've got Enphase. It looks like you're trying to get a green candlestick out of there, but you're still negative a bit. You've got Apple popping. It's trying to get up. It's nearly flat on the day. Tesla's trying to show some green candlesticks, but not doing too well there at about negative 1.9, getting the red. There you go. Now it's going straight down. Like the second we look at it, it just plummets. This is like quickly look away. giant sell order comes in. Okay, New York Community Bank, 475. Yeah, still kind of trying to push down there. A lot of red today, sort of across the board. Eli Lilly's green with 38 bips. Costco's green. Yeah, Costco green on the Walmart earnings. Let's just say I haven't been short on Costco for like a week. It's probably a good thing. And honestly, the consumer has blown me away too. So I thought I was almost certain in Q1 we'd start to see some consumer weakening. Wrong. So that certainty has quickly turned on its head. So the consumer just continues to go into debt. Okay, I guess that is possible in America. Dave & Buster's, $60. Boy, have they ever been at 60 before? I don't know that they have. Yeah, they actually have been in like 2017. Wow. Wow, that's wild. What a longer-term downtrend they had there, huh? It's like a 6-year downtrend. And finally, they come out of a 6-year downtrend. Incredible. Incredible. Intel now about 3.67. Why is Embraer moving up? Let's see what's going on with Embraer. ERJ. I've got some exposure to this one. Let's see here. Yeah, Dave & Buster's done very well. Okie dokie. Okie dokie. Okie dokie. Let's see here. Embraer raised to investment grade by the S&P. Outlook stable. Okay. Blah, 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 blah. That's it. That's old news. Otherwise, there's nothing here on Embraer. Yeah, all right. So, how about the downside? ARM down 8%. Supermicro down 4.7. Oh, is it going to be another 0-day opportunity? Oh no. Well, it wouldn't really be 0-day if you go today. You'd have be like your 4-day shortened week here. But anyway, Supermicro down 4.5, Roku down 5, ARM down 8. ARM, I think, is heavily because we know it's controlled by so few, and there's such a little bit of float outstanding, and it makes that one extremely volatile. Supermicro has just been sort of a joke, in my opinion. I can't get over how overvalued it is. What was it? I put this on eHack this weekend. Look at this. Look at this. Look at this. Look at this. It's just my take. It could be wrong. But if you go to eHack, this is how I do it. And you just Command F. Okay, see, there's a search function built in. SMCI. All right, here. Okay, so Barclays on SMCI. Barclays sees sustained AI demand for the H100 and B100 line, which comes out Q2 24. B100 is likely to be liquid cooled, which plays into SMCI's advantage. SMCI is partnered with NVIDIA for total solutions. Price target of $961 at 32 times 2025 EPS. Let that sink in for a second. Okay, did you let it sink in? They're using a 2025 EPS. Okay, we're on fiscal Q2 2024. So that means they're going out 18 months and assigning a 32x multiplier to a company that does liquid cooling for server racks and switches for server racks. You know, if the company settles at 10% EPS growth, that's a 3 peg for a server rack company. It's you know, that's wild. So I don't know. To me, it feels unsustainable. But then again, I've felt that way for a while. So, okay. What else? So next we have, I don't know. Let's see. I don't see any real news coming across the tickers. I just see more red right here. Let's look at Alive. People loading up the Nvidia shorts. Makes sense. Down 2.8% going into earnings. Well, the more it falls going into earnings, the less pain there might be after. Trade Desk giving up 5%. I mean, it did run up 17% Friday, but still, giving back 5%, that's kind of lame. Canadian bonds are detaching from U.S. Treasuries after a surprisingly cool inflation print in Ottawa. Widest spread in about 2 months. Below forecast was a surprise. Monthly services inflation was 0 in Canada. That really makes you wonder if the numbers we had in the U.S. are just a little riggy-doodlud or just wrong. See, there's rigging, which implies, you know, something evil. And then there's wrong, which just implies stupid or bad. Intel just can't keep it up. They're really struggling to keep it up on their stimmy check here. Oh well, that's Intel for you. So, oh yeah, the Qs dropped a little bit too here as Nvidia's tanking. Yeah, look at that. Qs were down. They just dropped another 20 basis points basically. You opened down, and you're certainly still trending down. So you'll probably see more of this today. Honestly, I think it's very difficult to go into Nvidia earnings and the minutes buying. I don't know. I don't see that as highly realistic. So it doesn't surprise me to see red in both areas. So we'll see. We shall see. Now down 3-2. Yeah, Nvidia's just going straight off. And that actually might drive SMCI lower. So there's more shorting to be done on SMCI. That is possible. Yeah, anything green is barely holding on. We's going red today. So if you're shorting, buckle up. You're just going for a ride. Maybe a good ride. Okay, what else? So let's see what else the suits are saying here. Walmart suggests tough time for non-food retail. Yeah, that was on consumption. Nvidia, we talked about that being as macro as the Fed. Markets are calm, even as Putin grows stronger. Yeah, I don't think you'd had much of a Putin reaction or a market reaction after the. I covered that also on eHack this weekend. One of the cities was in the Donetsk region was taken over. Yeah, you just scroll down a little bit. There it is. Avdiivka. Anyway, talked a little bit about the cost of missiles over here and where this particular city is. Then, let's see. Anything else? Ooh, Nvidia's going to head towards 4% down. Boy, everything's taking a little bit of a beating there. How about bonds? 4.265. How's our yield curve and how are inflation expectations? Let's take a peek at those two things. So yield curve, let's see here. 10.2. I guess 210 would be the way to say it. But we're at negative 32 bips. We've been there forever, I feel like. Well, for a month. Okay, maybe not. We've been there for a few weeks. But it just feels like we're always there. And then we've got the 5-year break-even. 5-year break-even's at 2.39. It did spike up after PPI and CPI last week, but it's finally trying to rotate down again. And then the 5-year forward. Oh, let's see. 5-year forward. 5-year forward. This is showing Oh, it's up also 2.28. Everything's kind of moved up about 10 to 20 basis points after that inflation report. Ooh. Oh, and Brent's sitting at 83 bucks. It's also moved up. All right. So, okay. Let's see. Oh, yeah, look at that. Oh, wow. Oh my gosh, look at Nvidia. It's down 5.5% now. ARM's down 9. Supermicro's down 8. Oh boy. Everybody's getting into shorting Nvidia right before earnings. You know what is interesting is there was a lot of talk about maybe buying puts on Nvidia last week. The problem with that is you would have had 3 days of theta decay. So it doesn't surprise me that a lot of people, well, actually, it would have been like 4 days because the day you bought, Saturday, Sunday, Monday. Yeah, it's like 4 days of theta decay. That's crazy. So it doesn't surprise me that people are probably going to load up their short bets today. But everything's basically tanking. I mean, Tesla's down 3%. Trade Desk down 6 right here. ARMS down 9, Supermicro down 8, Palantir down 3-4. Wow. There's the tanking of the market. It's funny. I've been joking in the office. I go, the market's gonna tank after Nvidia earnings, and it feels like it's starting as we walk into Nvidia earnings and the FOMC minutes. You look at the Qs. I mean, look at that. It's like the straight down. It's like everybody's waking up to go, all right, taking the chips off the table because, you know, it's Nvidia earnings week. So go bearish. Wild. Yeah. So what about Facebook? Facebook's flat. Look at that. Facebook and Microsoft just don't care. It's kind of remarkable. These guys, they're so resilient. So you can't lose money on them, is what it's felt like so far, which is scary because, you know, as soon as you kind of start thinking, oh, you can't lose money on a stock, you know, that's when you start running into problems. But then again, I mean, it's just been true for you know, over a year here. Microsoft and Facebook, and to some extent Google, and the others have done so exceptionally well. AMD's down 4%. Yeah, a lot of pain on that chip side today. Tesla 3.2. Supermicro sitting here at 7. So what's happening on the candles? Okay, trying to get a little bit of a bounce there. I wonder if that'll actually sustain. Yeah, look at that moment there. That candle. What was that after 700? Yeah, look at that. Oh, you can see where people are setting their triggers. As soon as we hit 700, or I should say as soon as we broke 700 within the candlestick, look at this. You went from 700 all the way down to 682. Holy crap. That just goes to show the power of people setting round numbered limits. Very, very common. But look at even the volume. I mean, you had 1.6 million shares of this sucker trade, which I mean, for perspective, that number is really big. That number is, whoa. In that one candlestick right here, $1.1 billion traded. So as soon as you hit 7, falling, you know, you had your stops or whatever execute, and you got right down to 682 with $1.1 billion worth of Nvidia shares traded in one candlestick. That's 1 minute. Holy crap. How much does this thing usually trade on a day? See, that would be interesting. Oh, I don't have my volume on. Or whatever, I'll look at it. Well, I can just look at the top. Yeah, on a usual day, you trade about 50 million shares. We've already done 12.2. Yeah, it is the open, though, so. But anyway, that's wild. All right. Well, it does look like you're trying to get some green candles to squeeze to eke out a little bit of pause. That's somewhat what happened with SMCI, though. You had last week, you had this little shelf that it hit, and then it just collapsed. Where was the shelf? I think this was it. Yeah. So you shelved down to here, about 865. You kind of hung out there for a while, and then going into the rest of the day, you dropped another like 50 points. Right here. There it is. Wild. Woo! All right. Well, again, not a horrible surprise going into the catalyst that we have. We'll see if this worsens or continues tomorrow. It's all possible. Bitcoin even broke 52 there, so you know this is pretty market-wide here. Again, with the exception of like Microsoft and Meta, who just don't really care. Enphase only down 1.79. Somewhat implies that this isn't really an interest rate move. This is more of like a big tech kind of move. And when you get those big tech moves, you always get Tesla caught up in those. Just funny because it is the only non-magnificent 7 of the Magnificent 7. Again, it should be 6. Kramer's 6-pack. Oh no. Risk off starting? Exactly. Dollar weakening. Thoughts on Hasbro? Hasbro. Oh, we gotta get to the course member live. But did they report or anything recently? Hasbro EBITDA 10.6 million. Oh, they don't actually make that much money in a quarter. Well, I would have thought they would have made much more money than that. It's the toy company. Let's see here. Forecast for the year, $3.32 on EPS. Wow, their growth has been negative for a few years here. Growth will probably stabilize somewhere on maybe 12%. It's trading for 50.5 divided by 3.32. It's trading for about 15 times. So, okay. I mean, from a peg basis, it's not horrible. But the problem is you've had negative growth. So anytime you have negative growth, I don't know, people get a little bearish on stocks. I don't know how the stocks perform, but... All right. Any last minute news? Let's see. Stocks take a break as earnings roll in. Yeah, no, not really. All right, then. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Ooh, Microsoft's almost down 1%, so Microsoft decided to start playing ball a little bit. Anyway, I had to go make another cup of coffee. So, thank you so much. We'll see y'all soon. Bye.